Welcome to Budgeting 101 with LOC. My name is Jen Kazara, and I am the Youth and Community Development Coordinator at LOC. I've been with LOC for actually a little over 5 years. My 5-year anniversary was back in March, and I started off as a teller in operations, and then I moved into loan applications and accounts. I was also doing staff training, and then I moved into our community relations department, and I have been in this department for almost 2 years now. We do financial education for adults and then also youth. And my main focus throughout the school year is running our student-run credit union. So across Oakland and Livingston County, we have 21 branches. I am in charge of 9 of those in Farmington and Farmington Hills. And I have 2 middle schools and the rest are elementary. So we have student members that come down and deposit into their account weekly. And then I also have student employees that run the credit union itself. So enough about me. We are going to do a basic budget overview tonight. That's going to cover what a budget includes, specific types of budgeting, and then tools that you can use to start building your budget. So everyone is going to need a budget regardless of income. Having a budget is going to help you maximize your future financial goals. With this global pandemic going on, a budget is more important than ever. Putting your budget together and evaluating that based on today's current situation, because you don't know what tomorrow is going to bring. So we have a lot of people who are on unemployment right now. We've seen that number skyrocket. And also there's people that are put on furlough by their companies. So we don't know what could happen tomorrow. So we want to try to prepare for that. And having a budget might help ease those financial burdens and stress during this time. So the standard definition of a budget is an estimate, often itemized, of expected income and expenses over a given period of time. Now, when we're looking at that given period of time, we're looking at how we're paid. So it's either going to be weekly, bi-weekly, monthly, depending on how you're paid by your employer. So when we look at the budget, we take that income and we break down expenses based on that time frame. When we're looking at our income, we're looking at gross and net income. So this is an example of an annual salary of $45,000. Our gross monthly income, so before taxes and other deductions are taken out, is $3,750. On here you can see that we have federal, state, Social Security, and Medicare tax taken out of our paychecks. And then there's an option for health insurance premiums if your employer covers a portion of that or all of it. We also have an option of a 401k. So if you contribute to your 401k and your employer is matching a certain percentage of that. Another thing that might come out of this is going to be your HSA or FSA contribution. So our health savings accounts that we're looking at. If you have one of those accounts and you contribute money out of your paycheck to those, then that may be coming out of your gross income too. So when we look at our budget, we're directly looking at our net monthly income, so our take home. Sorry about that. When you look at your budget and what it includes, we look at 2 different categories. So we have our needs and our wants. Our needs are going to be something that we need to sustain our life and our day-to-day tasks. Our wants are going to be something that we don't need to sustain our life, but they make our life more enjoyable day-to-day. So when you look at these needs and wants, our needs fall under categories of food, housing and utilities, transportation, healthcare, clothing, and then your savings. When we look at our wants, we're looking at things such as going to sporting events, going out to eat, we go on vacations, any of our extra entertainment that we do to make our life more enjoyable. Now, sometimes needs and wants start to go together and mesh together, and that's why we want to try to make them distinct. So example, if you are purchasing a house, you need a house to be able to stay in your life or somewhere to live, but you do not need a $500,000 house on a lake. If you're going out to eat and buying food, you don't need to go to the fanciest restaurant every single night. And then for transportation, you don't need a brand new leased vehicle or buy a brand new vehicle with all of the upgrades. You do need a car to get around, but you don't need the most expensive one. So we want to make sure that we're looking at our needs and wants and differentiating those categories correctly. So I know most of you know how to use a calculator on your phone or either a regular calculator. And some of you may know the basics of Excel and how to use that. When you're starting your budget, you are tracking all expenses that come in and all expenses that go out. So knowing where your money goes is the main part that you're looking at. The hardest part about a budget is sticking to your budget. So that's why you want to set reasonable goals. And those goals are going to include short-term and long-term goals. So when we're looking at short-term goals, we're looking at things such as saving a down payment for a car. If we're looking at a long-term goal, that could be something like saving for your child's education. That's going to be a longer period of time that you're doing that savings. So you want to look at your own goals and make sure they're attainable for you. So when you start, I'd like to give this example, when you start a weight loss program, they always say you want to set reasonable, attainable goals to start off. Because if you decide to go all in and cut a bunch of calories or meal prep every single meal, you're more likely to fall short of those goals that you made. So looking at your budget individually and really setting your expectations on your budget so that you can reach those goals and know you can succeed and hopefully continue working on your budget from there. So the standard plan for budgeting you see a lot if you look up budgeting is going to be the 50-30-20 rule. So on here we see our net income. We divide that into 3 different categories. We already talked about our needs and our wants, and those are divided into 50% and 30%. The other 20%, we are looking at our savings, and that's what we're saving for. So it could be included in your long-term saving or long-term retirement. So that could be part of your 401k that you take out of there. You could be saving to purchase a house or a car in the future. And then we also have our short-term emergencies that we save for. So things that we consider an emergency, but we know are going to happen in the future. So this is just an example of the 50-30-20 budget broken down. This was for the $45,000 annual income. So we see our net income at the top, and then our needs, wants, and savings are broken down into those percentages. So when we look at this 50-30-20 budget, we want to know that it's the standard for budgeting, but these percentages need to be evaluated based on individual lifestyle and goal. So you need to go through and see what's going to work best for you. And that leads me into, does this rule work for everyone? No, because everyone is going to be financially different. We always have different needs, different wants, and how we're going to prioritize those. We all have different income and expenses and dependents that we need to rule into our budget. So one plan fits all isn't how it works for budgeting, and individually looking at that is going to help you. Again, your priorities are going to drive your budgeting goals. So if we look at someone who is having a baby, their priorities are going to be much different than someone who is single. If we look at someone who's trying to purchase a house and is going to have extra expenses for that, we are going to see much different priorities in their life and their budget specifically. On here, you see that if you have a higher income, you may want to consider saving more than 20%. If you feel like 20% is something that you can't do at the time, then saving something is always better than nothing. So now we're gonna break down our expenses into the main ones that are included in a budget. So we have our income, expenses with needs and wants, and now breaking down those main expenses that we look at. So if you're looking at housing, everyone is either going to have a rent or mortgage payment. And one of the payments that's not included on here, or options that's not included on here, is going to be if you live at home. So if you live with parents or another roommate, then you're gonna have either a split rent payment and utilities to be responsible for. On here you can see that we have our utilities under each housing expense. So those can include gas, electric, and water. Sometimes with a condo, your utilities can be included in your association fees, which you have to pay for monthly. And then we also look at insurance that is required for all types of housing expenses. So even if you are in an apartment, it's mostly required that you have rental insurance. Under the house, if you own a house, you have to pay taxes, and then also think about yard maintenance costs if you have someone coming out to do your yard maintenance, or if you need the equipment to do that yourself. Our next expense is transportation. So this can be owning a vehicle or leasing a vehicle. You're always going to have a monthly car payment, and you're going to need insurance. Obviously, insurance is year to year, and you want to reevaluate that every single year with the insurance company that you're currently with. You also need registration, which is based on your vehicle size. So that's going to change year to year if you end up changing your vehicle too. Setting aside gas expenses, obviously right now we're not really driving that much because we're at a stay-at-home order, which I just saw was extended to the 28th. So that expense you still want to include in your budget, but you may have it a little bit lower at this time because of the circumstances. And then we also look at maintenance for our vehicles. So oil changes that we need to routinely have, or service that needs to be done if we own the vehicle. Usually for leases, if it's a standard service, they're going to cover that under your lease. And then also washing your car, things like that to keep your car in nice shape. Our other transportation option is going to be public transportation. Now with Michigan, we usually aren't using the train or subway, but if you were to move out of state, you might want to consider putting that expense into your budget and maybe taking out a car expense, because usually if you live in the city, you're going to be using public transportation over owning or leasing a vehicle. The bus or the Uber Lyft, obviously for Uber/Lyft, we are looking at different expenses because those rates vary depending on if it's surging at that time or there's a lot of people trying to get one of those. So including that in your budget though, if that's your form of transportation, is necessary. Some of the other expenses that we look at are food expenses. Right now, the average American spends about $3,000 dining out a year. And remember, that's for one person per household. That's according to the Bureau of Labor Statistics. And normally, we're eating out a lot more than we are right now. So we could still be doing takeout and supporting those small businesses in our community. But when you realize when you go out to a social gathering, you're more likely to be purchasing appetizers and adding on drinks and maybe desserts to your meals, where right now a lot of the companies and restaurants that we go to are creating family deals, and you're mostly just ordering a meal. So those eating out expenses are drastically cut during this time. And we see that our grocery budget has skyrocketed. So we have a lot of people who are stocking up on groceries, stocking up on essentials, maybe even too much. So that grocery budget is going to fluctuate depending on the time too. Our entertainment expenses also are included in this. So these are things such as concerts, sporting events, going on vacation. All of that is included in your budget. And again, mostly all of our wants that are in our budget are kind of cut off at this point. With the health crisis, we're not going out to the stadiums. We're not going to social gatherings. So that has really dropped a lot because of that. But there are other things that we're doing during this time. So for example, you may have purchased a separate streaming service that you didn't have before because you're stuck in the house, or you might be buying outdoor activities or games for inside for your family to be entertained during this time. So those expenses are going to be added. And then our last expense that I like talking about is a pet. When I was younger, my mom always said, they're a lot of work, we can't get a dog, this and that. And I was always like, oh, I'll walk them, I'll do everything. But there's so many expenses included when you have a pet or multiple pets. And thinking about the lifespan of a pet and how they will affect your budget for a decent amount of time, expecting that they live out their full life. So I want you to think right now, if you had $1,000 expense today that you had to cover, would you be able to cover that expense? And would you be covering it out of pocket? Would you have to put that expense on a credit card, or maybe take out a personal loan for that expense? According to Bankrate's January Financial Security Index, 40% of Americans would borrow money to cover a $1,000 emergency. Now that's huge, because if you look at that and say you ended up putting that $1,000 on a credit card that you have, I'm going to use an average interest rate of a credit card at 17%. So if you ended up not charging anything else on that credit card and just put the $1,000 emergency on there, it would take you 3 years to pay that off. And if you're paying the minimum payment, and you would have almost double the amount of debt at the end of that. So when you're looking at emergencies, if you could have put that out of pocket instead of putting it on a credit card or personal loan, you're going to obviously save money in the long run. When we have emergencies and shocks happen in our lives, they sometimes have the snowball effect. So one shock might lead to another, and then we're just rolling debt on top of each other. So we want to be prepared in our budget to be able to cover some of these emergencies that happen. And that's what brings me to the savings account. So like we talked about, we want to have cash for unexpected, but really expected emergencies or expenses. For example, if you own a house and your hot water heater breaks, you have to have that replaced. That's a decent amount of money to have to fork out in one payment. If you were to create a savings account for your house and was putting money into that, maybe you could pull that money out of there. If you have to purchase a new tire because you ran over a pothole, you know that you might have those expenses because you own a car. So looking at the future and knowing that these expected emergencies may happen, being prepared for them is going to help you. We also save for big ticket items such as cars or furniture or household items, and then saving for a specific purpose. My favorite example of that, I have a Christmas club, and I have money from my paycheck put into the Christmas club every single time that I'm paid. And so when it comes to the holidays, I don't have to fork out a bunch of money. I have that savings account available so that I can spend that money instead of putting it on credit cards and having to worry about paying off that debt later. Another example, if you are going to weddings or birthday parties, you could set aside money for those specific expenses so that you can just pull out of that account when you're attending those. And then, of course, vacations. We all like to save for vacations or go on vacation. Right now, we're kind of stuck. but planning for future vacations and putting money away for those so that you have that money when it comes time to buy your flights or hotel or anything like that. So when we look at savings, I pulled up a 52-week savings challenge, and this was just off of the internet. I did this a couple years back with some of my coworkers. So basically every single week you add on $1, and at the end of the year you'd have $1,378. That's just a simple way of showing a little bit goes a long way. With my high school students, I like to use the example of if I saved $10 per week since the time that I graduated high school, I would have about $5,200. Now, when I ask them if they think $10 a week is a lot, they mostly say no. $10 a week is maybe a lunch at Panera or something like that. If I save $20 a week since I graduated high school, I would have around $10,500. That's a huge amount. And yes, it's over a longer period of time because I am actually hitting my 10-year since I've graduated. But when you look at the amount per week, it doesn't seem like a lot in the long run. So you can look up different challenges if you wanted to try those out. There's a bunch online. On here, I also gave the example of just $10 a week. Say you cut back on one lunch that you went out while you were at work instead of bringing lunch, you could save $520 a week. I'm sorry, a year, not a week. That would be nice if it would be a week. Our next savings account is going to be an investment account. So if we're looking at our 401k plan, like I talked about, your employer may offer this and offers a certain percentage that they will match. So it's really vital to take advantage of this program because this is going to be something where you are essentially receiving free money as long as you contribute. So I would check into your employer specifically and see what they offer through this program. And then other account options are going to be our IRA. So we have two different types, traditional and Roth, and they have different qualifications and different rules about when you can withdraw and all of that. But I would definitely speak to a financial advisor when you're trying to open one of these just to see which one would be best for you. Obviously, right now with our certain circumstances, investing into an IRA might not be the best option, but this is definitely something that you can think about for the future. So finding unnecessary spending habits is huge if you want to maximize your saving. So I am a Starbucks fanatic, and I'm sure some of you are aware of their rewards program and their automatic reloading on their Starbucks app. So I went back and I had reloaded my card, I think 5 times in 1 month, but I didn't even notice that I was doing it because it's so easy to just automatically reload that. So when you are looking at finding unnecessary spending in your budget, you want to make sure that you're looking at how you're spending. So maybe if the easiness of a credit card is too risky for you, doing the basic checking and debit card transactions might be the best option so that you don't rack up a bunch of debt throughout the month and then you only know what happened when you get your statement that you have to pay at the end of the month. So this is an example. If I decided to actually bring my coffee from home instead of going to Starbucks 5 times a week, I could have a savings of $390 per year. I like another example of if I were to bring my lunch from home at least 4 times a week and not go out to lunch, I could be saving $10 a week from not going out. And then that $10 each week for a month would be $40. So that $40 could end up paying for my internet cost or another expense that I have. Our options for debt. So here we are seeing a $5,000 credit card amount. I know it says loan amount on there, but I just wanted to get the interest on here so you guys could see. This would be if you put $5,000 on a credit card and only made the minimum payment of $178.26 for 3 years. You're looking at almost $6,500 for your overall debt. If you were to instead decide to do a debt consolidation or personal loan for that amount, we see that the interest rate is much, much lower, and that is true for most personal loans compared to credit cards. So in the end, we would be paying about $5,600 for the total debt amount. So looking at your credit cards, it might be the best option to consolidate that debt so that you have a minimum payment per month at a lower percentage rate, and you have that end date, you have that end goal, and you're not just revolving month to month for your credit card. So I'm going to kind of transition into the ways that you can budget. Right here, we have an example of LOC's LifeTrack, and I know that other financial institutions have features available that are comparable to LifeTrack. This will tie your checking account into the LifeTrack app, and it's going to be able to show you your budget, and you can tag expenses and put them into specific categories. You can also set up alerts on here, so if your checking account gets too low, then you could transfer money into it out of your savings account so that you don't get those overdraft fees. Another way of budgeting, which is my favorite way of budgeting, and it's kind of funny because I just saw an ad the other day that said Excel budgeting is so 2019 because there's all of these different types of ways to do budgeting on your phone now. But I feel that the Excel budgeting works the best for me. You can see here that the date is put in there bi-weekly. I can change my net pay if I had any overtime or any bonuses that payday. And then also I can keep track of all the bills underneath. I color code them specifically. I can set up things like credit card payments in the future so that I know what's going to come out of my budget. And then obviously on here, the savings category. So you can make sure that you're putting money in your savings account. A couple other ways that you could start off your budget. There's plenty of apps that you can discover in the App Store on Google Play. Mint is known mostly for money management, and then Wally is going to be for tracking expenses. So going through and seeing which app makes the most sense to you and what features you want to be specified. There's a bunch to look at in our app stores. So with our budget, we want to make sure that we are also looking at other factors that affect that. So our credit score is going to definitely affect our finances in the long run. So this is going to be regarding interest rates or ability to get approved for a loan or a credit card. Your payments are going to be lower if you have a higher credit score because of those interest rates. So really making sure that you're building a strong credit score so that your car payments or loan payments or house payments are lower because of that score. And it's not too late to build your credit. And I just wanted to point out a few ways that you can do that. So the main one is going to be paying your bills on time. So you want to make sure that all your payments are made, especially before that 30-day mark past due, because then you can get a 30-day late on your report. You also want to make sure that you are not maxing out your credit cards or carrying high balances on them. Each month, if it's possible, you want to pay off the balance in full. And if you can't do that, then it's best to make more than your minimum payment because that's going to help build your score over time. If you're trying to actually build your credit because you have a lower score, you want to look into secured credit card or loans. And then also you can have the option of getting a cosigner if that's something that's available to you, maybe a parent or a relative that could co-sign for you and build that credit score, but still allow you to receive the loan in your name. Another way to do this with the credit cards through your current credit union or bank, because of that personal relationship that you've had with them, you may be eligible to receive a credit card from them. We kind of went over some of this in the past slides, but having good credit is going to help you. You'll be able to be approved for larger loan amounts and lower interest rates. Also, future employers pull your credit when you are hired, and then car insurance companies actually check your credit too. If you have bad credit, I wanted to point out that delinquent payments, like those 30, 60, 90-day payments, are going to affect your score and drop it for a longer period of time. And then when we go into collections where we do not pay the bill whatsoever and let that go, they go to a collection agency, and those will stay on your report for 7 years, even if they're paid in full. So we want to make sure that we're trying to build a strong credit score to help us in the long run. So obviously right now, during this pandemic, not everyone knows what to do in this situation because there's so many different factors going on. And making drastic decisions can lead to very harmful consequences for you and your finances. So I just wanted to point out a few examples of that. We see a lot of people buying too many shelter-in-place supplies. Just getting your essential needs and not overspending out of fear is huge during this time. If you're thinking about selling off or buying new investments because the stock market is plummeting or going up and down depending, you want to make sure you speak with your financial advisor before you decide to make that move. They'll be able to guide you into logical decisions that are going to help your budget and not harm it. Right now, we don't really know when normalcy is going to return. So we have to focus on what we can control. So conserving our cash for our essential expenses, and then revisiting our budgets to cut back on certain spending. So it's especially important for those who have already lost income due to COVID-19 to make sure that they review their current budget and see if there's any unnecessary spending or non-vital expenses that we can cut back on and save into the coming months. Looking into refinancing your debt. Maybe you want to do a debt consolidation with your credit cards that you currently have, or refinancing your mortgage. The rates are very low right now, so that might be something that you want to look into. And then applying for government aid if that's absolutely necessary. That's why those programs are there. So looking into that application and the process for it. The main thing I want to point out is if you're having problems paying your bills, or you don't believe that you can make your payments on time, I want you to reach out to that lender directly and try to see if they have other options for you. If you go on some of the online sites of certain companies that you work with or certain credit cards that you have, they already have COVID-19 warnings at the top, and that can take you to their page to call their contact center or speak with someone at their company to see what your options are before you decide to just not make your payment, because that's going to definitely affect your credit score and your budget as we move hopefully soon out of this global pandemic. So my contact information is on the screen. You can send me an email or call and I will get back to you. But if no one has any other questions, I think we're going to wrap this up for the night. I want to thank you for joining me. I hope that you learned a couple of things about budgeting, and enjoy your night.